We're joined now by Warren Pies. He's 314 Research co-founder. It's good to have you. Welcome back.
It's good to be here. Thank you for having me.
I mean, I guess that is the question. Just how far can stocks continue to go up? They don't seem to care about anything other than what's right in front of it. Earnings are good, rate cuts are coming, and the economy's strong. I don't care about tariff headlines. I don't care about this, and I don't care about that. Is that where we're at?
I think you're right. I mean, it's difficult to make a near-term bear case. I think we came through. There was a test for this market coming through the summer. It's a seasonally weak period of the year, and we had all these systematic buyers that I've spoken about with you on the show, full of stock. We had corporations, which have been a big support to the market, step away during that period of time. And we had excess sentiment. You know, our gauge of sentiment was at 70, which is extreme. Anything over 60 is optimism. That's come back down to 50. So here we are, we're entering into the seasonally strong period of the year. Sentiment has corrected. These systematic buyers have normalized their positions. And corporations are coming back in aggressively at the end of the year. And so we take all that, put it together, and then we say strategists still have their median target below where the S&P is trading out to year end. When you look at all the Q4s, where that condition has been at the start of the Q4, we're higher every year except for 2012. And so with an average about 4%. So you can project that out. And I think that's what we're looking at here. That's the base case. It has to be the base case.
I left something out. I mean, there's a really interesting story that's moved in the last, hour or so by another news organization where they're quoting Citadel Securities' Scott Rubner. He talks about how powerful retail demand has been, that it continues to act as the price setter of this market. Retail traders responsible for 22% of trading volume in U.S. stocks. Individual investors have been net buyers of U.S. stocks in 23 of the past 27 weeks. What do you make of the power of the retail cohort, whether we are giving that group enough credit in the role it's playing in this rally?
I think it's changing models in real time of how we look at this market. And I think it explains, I just laid out the case, like many institutional investors were cautious over the summer, given what I just laid out. And retail carried us through. And Scott's work aligns oftentimes with our work. And I know that, so you have that retail bid, and then corporations come back at the level that we expect them to come back at, more than $1 trillion annual run rate that we've seen this year. That's a powerful combination. You know, all these systematic buyers, and you throw retail in the mix. What it means is that we can reset sentiment and reset maybe that 3% correction we got in October was everything we're going to get. And I think that's a little bit surprising and shocking to the institutions. But yes, retail is buying the dip. I think it's part of this debasement trade we've been laying out for a while.
Yeah, I mean, maybe driving a lot of stuff. The momentum trade, certainly the meme activity. The other point that he makes is that you're going to start to get buybacks again starting next week, right? We've had the blackout because of earnings period, and now you're going to throw that into the mix too?
Yeah, like I said, that's exactly what we're seeing. You know, we do seasonality of buybacks, and that really ramps up here in about a week. And so that explains a lot of the seasonality that we see. So one of the things we saw is that during the April-May period, when we had all of the tariff drama and the market was selling off, corporations were as much as 8% of buying activity in the market. And so that was crazy levels that we've ever seen. So anytime we see corporation buying more than 1% of the volume in the market, we tend to have strong days out of the equity, out of the S&P 500. And so you're talking 8, 2, 3, 4, 5% regularly throughout this year. It's along with retail, like I said, it's a lot of buying pressure. It's like trying to hold a beach ball underwater. It just can't, it doesn't work with the math there. So yeah, you have to be bullish to year end. And then the other thing we hear is, valuations, and we've done a lot of work on valuations, and I don't see this market as really being overvalued, to be honest.